All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Friday, everybody. Today is July 24th, 2026. And our top story this morning, once again, is volatility in South Korea. How volatile is it? Well, it's funny you should ask. Negative 5.7% yesterday for the South Korean KOSPI index. That is its 30th day of a plus or minus 5% move just in 2026. 30 times now this year, the index has moved up or down 5% in a single day. That is versus once in all of 2024 and just twice in all of 2025. 30 in the first not even 7 months of this year. And the South Korean index triggered circuit breakers again yesterday. That is now the 10th consecutive trading day where the South Korean index triggered the circuit breakers. All right. And, look, what would any rational human being do if, say, your dishwasher was blowing the circuit breaker every time you turned it on? 10 days in a row, your dishwasher blew a circuit breaker. Would you call a repair guy, maybe fix something? Or would you just go down in the basement, reset the breaker, and turn the thing back on and ignore the problem and hope for the best? I'm sure these things will just work themselves out in the long run, right? Electrical problems are funny like that. Guys, again, we're talking about an index here, all right? This is not a shitcoin. This is a freaking index. And the problem is the index is so heavily keyed to just those two companies, SK Hynix and Samsung, the memory chip makers that have now gotten so big that they are basically the entirety of the index. And South Korean retail traders have piled in like a freaking stampede of lemmings, many using levered ETF dog shit products in order to pile into these things. And they are just getting wiped out by this volatility. And I warned about this. It was a little over a month ago when I saw that article about people selling their life insurance policies to raise the money to buy stocks. I said, holy shit, guys, this is going to end in tears for these people. Month later, here we are. Looks like nobody saw that coming. Now, as this is going on, we've got South Korean regulators are now scrambling. Last week, they announced that effective at the end of August, they were going to implement various regulatory controls to try to temper that volatility. Now they're saying, we can't wait until the end of August. They're moving that up to the end of July, which is, that's next week. So I don't know if I want to say price controls, but regulatory hurdles are being put in place to try to calm down this volatility. And even as this is all going on, the two companies that are really responsible for it, SK Hynix and Samsung, they are supposedly about to ink deals for, and I quote, a large sum of money with U.S. tech firms. These are meant to be like massively large supply deals for memory chips from U.S., almost certainly hyperscalers and the AI firms, probably with tens or even hundreds of billions of dollar price tags attached to them, where they're basically going to say, yeah, we're going to go ahead and keep memory prices elevated for the foreseeable future, paid for by money we don't have, maybe leaning a little bit more into the bond market. Got to keep that bubble inflated, baby. And so everything that the average person buys that has any memory in it is going to stay more expensive for the foreseeable future. Yeah, it's just wonderful what the AI bros are doing to the economy. It's great. Meanwhile, Intel stock is ripping this morning. They jumped on earnings. Big revenue growth, the fastest revenue growth in 15 years, 25% year over year for Intel. Intel stock has now more than tripled since the government took a stake of 10% last year. Maybe getting a little bit frothy on that one, though. Got an interesting story about Oracle also. Oracle says they have signed a 10-year software deal with the Pentagon, valued at $7 billion. All right, Oracle. Now, there's the question. Is this business as usual for Oracle? Or is this crony capitalism and a backdoor AI bailout? I don't know. We'll have to talk a little bit about that one. But coincidentally, Larry Ellison just happened to give $47 million to a pro-Trump super PAC during the 2024 election cycle, but I'm sure that has nothing to do with the $7 billion software contract for Oracle, which Larry Ellison owns. Let's see. Trump has also implemented tariffs on 60 countries. He has slapped with 10 to 12% tariffs today. Why? Over forced labor. Apparently, slavery is a thing again in like 60 countries around the world, including the European Union, Canada and Japan. Actually, the word was they have not done enough to keep forced labor out of their supply chains, which means they buy something from some place that does forced labor. What's going on? We've been warning about this, guys. The Supreme Court struck down the tariffs last year. Trump said, okay, we've got these temporary tariffs, which I'm allowed to do. And then he put those on, and those are now expiring. And we said, look, as these expire, he's just going to put something else on there. And apparently it's forced labor today. That is why the tariffs are being put on there. Is the U.S. really like taking a hard stance against forced labor? No, Trump wants his tariffs, and this is the legal justification he's using. We've got Volkswagen is reported earnings as well. They cut their sales and their delivery forecast. Same day or same issue, different day, right? Chinese competition, tariffs, weakening consumers, oil prices, all hurting the car business. We got a unusually strong report from American Express. Big increase in consumer spending. The upper K is doing very well in our economy, and yet that stock is down on that news. And we've got a big move in Japan's bond market. They are throwing a fit in the Japanese bond market this morning. 40-year yields higher by 10 basis points for the Japanese bond market here. The BOJ is moving too slow. Sanai Takaichi is moving way too fast with her Keynesian stimulus spending. And you've got the things going on in the Middle East driving the oil supply higher. Japan is completely dependent on imported oil, which has pressured their currency. All of these things combined is reigniting inflation fears, causing those long bonds to tank and their yields to rise. BOJ left interest rates steady again. They're talking about maybe raising in December here. They're going to have to pick up the pace. It is not enough in the Japanese bond market, of which the Bank of Japan is like 50% of the Japanese bond market now. It's almost not even a real market anymore. But what is left of the Japanese bond market is telling the BOJ, you better start moving faster. And last but not least, we got another data center bites the dust. This time a data center in East Texas was canceled after Governor Greg Abbott said you got to bring your own power and you have to reuse your water. And the data center operator said that's going to be too expensive. We're going to cancel the project. So another one is down. Public backlash, pushback against these data centers. It is nationwide in my hometown, in Texas, in Utah. This bubble, man, its days are numbered. But before that bursts, we got to shrink my big melon of head and let's see what's going on in the world of finance. Don't forget the like button and the subscribe button so you can come back tomorrow and have your coffee with us melon heads. And when I say tomorrow, I, of course, mean Monday morning because tomorrow's Saturday and the markets are closed. We do this every business day. The S&P 500 is higher this morning by 8 points, 0.11% in the green. The Dow is up by 150 points or 0.29% higher, recovering a little bit of the losses from yesterday. And the NASDAQ has just dipped into the red here, down by 8 points or essentially flat on the morning. So stocks are not doing a whole lot at the moment. The U.S. dollar is stronger by 3 basis points, 101.48. Not a lot of movement in the dollar this morning. The bond market is quiet as well, with yields down across the board here. The 30-year yield is at 5.158. That's lower by a point and change. The 10-year yield is at 4.681, lower by 2 points and change. The 2-year yield is at 4.335, down by 2.5 points. And the 1 month is at 3.773, lower by almost 1.5 basis points. Bitcoin is in the red again this morning, $610 lower, trading at $64,458 as priced on Coinbase. This is the third consecutive red day for Bitcoin. Looking over at commodities, we've got a mixed bag this morning. Spot gold, $4,046. That's lower by $3, 0.1%, essentially unchanged on the morning. Spot silver is at $57.90. That's higher by a quarter or about 0.4%. I like the shiny. We've got copper is unchanged on the morning. Platinum is lower by 1.1%. Palladium is lower by 1.3%. And oil is down from its highs yesterday, off by $2 here or 2.25% lower, but still just above $90 a barrel. You're trading at $90.12 for September. WTI futures. Let's take a look at the oil chart here. Again, this is the first red day in a while since the Houthis started acting up. We have now given up about half of the big gains that we saw yesterday, but holding that $90 level Again, since the re-implementation or reignition of hostilities in Iran, oil has been trending steadily higher, back to the lower end of where oil was trading at through most of the first few months of the conflict. Still nowhere near those highs over 100. All right, but here's the big news this morning. Once again, volatility in South Korea. We are looking at the KOSPI index. This is the big South Korean tech index. Again, 50% of this is made up of SK Hynix and Samsung. Negative 5.72% yesterday. And you can see, guys, these candles for the last month, I mean, this whole episode here, and really you could even include a lot of this too, right? Just look at the size of these moves versus the size of the moves we were seeing earlier this year. I mean, the South Korean index has just gone cuckoo for Cocoa Puffs here. Some of these statistics are unreal. Let's take a look at this article in the Chosun Daily. Korean markets trigger circuit breakers for 10th day in a row. Holy shit. 10 days in a row, they've hit circuit breakers. Investors label markets as a gambling den, and circuit breaker rules are now being scrutinized. The KOSPI and the KOSDAQ expanded their intraday losses on the 24th, triggering a sell-side circuit breaker. This marks the 10th consecutive trading day since July 10th, excluding the holidays and weekends, that a circuit breaker has been activated, with 5 sell-side and 5 buy-side circuit breakers. The market has swung between extreme volatility daily. Bloomberg News reported that the volatility of the KOSPI is greater than that of the cryptocurrency market. Among investors, there are even comments that this is true odd-even gambling den. Some are suggesting that the circuit breaker criteria should be raised due to the frequent activations. Yep, that's right. Raise the circuit breaker level. That's what you do. When your dishwasher is blowing breakers day in and day out, and instead of fixing the problem, no, just replace it with a higher amp breaker. Or better yet, bypass the circuit breaker altogether, right? And then just go ahead and burn your house down. I mean, we wouldn't want to interfere with our tech stock bubble. Good God. Kim Se-Kwan, a researcher at Murray Asset Security, stated that escalating military tensions between the U.S. and Iran have pushed Brent crude for September above the psychological resistance level of $100 per barrel, increasing the energy price risk premium. He added that additionally, the U.S. Trade Representative's imposition of Section 301 forced labor tariffs on over 60 countries, including a 12.5% tariff on South Korea, is contributing to inflation and raising the discount rate for growth stocks. And Han Ji-young, a researcher at Kiwoom Securities, commented that amid the aftermath of big tech weakness such as Alphabet and the burden of rising oil prices and interest rates, the Korean stock market is expected to continue experiencing volatile conditions. That last comment there is in reference to Alphabet earnings, which were yesterday or the day before, and then market traded down on them yesterday, and the increasing CapEx budgets. When the NASDAQ didn't like that, that triggered some volatility in South Korea yesterday, combined, of course, with the whole thing going on in the Middle East and now the tariffs. And we've got more big tech is reporting next week. That's going to trigger volatility here in the States. So there's no reason to suspect any of this is going to even slow down. But again, here's an idea. When you blow in circuit breakers for 10 days in a row, just implement this little engineering workaround, if you will, and then you won't have a problem, right? I mean, what's the worst thing that could happen? Give it a shot. That's just a little outside the box thinking there. And as this is going on, we've got South Korea fast tracks a new rule for leverage ETFs to curb market swings. Authorities are intensifying efforts to curb extreme volatility. South Korea is accelerating the implementation of a higher minimum cash deposit requirement for investing in levered exchange-traded funds as authorities intensify efforts to curb extreme volatility in the world's best-performing stock market this year. The Financial Services Commission said Friday that it will bring forward the introduction of the cash deposit rule to the end of July from the end of August. Under the new requirement, Korean investors must hold a deposit or maintain an account balance of at least 30 million won in cash. That's just over $20,000 US when making new or additional investments in single stock, leveraged ETFs, or exchange traded notes. The measure is part of a broader policy package announced last week aimed at curbing market swings by raising the cost of leverage and increasing barriers to short-term speculation. Regulators have blamed leveraged products for amplifying volatility. Authorities have also temporarily suspended new listings of leveraged ETFs and exchange-traded notes and barred securities firms from marketing such products. So the regulators are spooked. They rolled out these measures to contain volatility last week, and they said, we'll do this at the end of August. And then the volatility just continued to get worse, and they're saying, all right, we changed our mind. We're going to do this next week instead. So we'll see what's going on. Now, even as all that's happening, Samsung and SK Hynix to ink large chip supply deals with U.S. firms. Now, this article is, there's some version of this article in just about every major financial outlet this morning, all very short on the details. So just there's big deals coming. No numbers, though. Samsung and SK Hynix are set to unveil major agreements involving very large sums with leading U.S. tech companies during President Lee Jae-myung's visit to Silicon Valley, a senior presidential official said. The announcement would likely include new long-term memory chip supply deals, strategic investment partnerships, and memorandums of understanding. Presidential policy chief Kim Yong-boom told reporters on Thursday he declined to disclose the value of the deals ahead of the company's announcements. So big tech and the frontier AI labs are going to do everything in their power to make sure memory prices stay higher for you and I, and they're all going to sign some big deals. We don't know the numbers, but it's probably going to be in the tens or hundreds of billions. Who knows? At this point, they just have random generators shouting out big numbers, and they'll be in the trillions by next month. All right, we've got Intel stock is jumping this morning as the chip maker rides AI boom to fastest revenue growth in almost 15 years. It's been a heck of a run for Intel, and it's continuing this morning. Intel reported better than expected second quarter results on Thursday, notching its fastest revenue growth for any quarter since 2011 and issuing guidance that topped expectations. Stock rose about 4%, extended trading. Earnings per share of 42 cents, adjusted, of course. That was versus 21 cents expected. Revenue of $16.1 billion versus $14.42 billion expected. Big beat on revenue there. Intel shares are up over 170% so far in 2026 as of Thursday's close, after soaring 84% last year when the U.S. government took a 10% stake in the company. It's part of an effort to support U.S. chip manufacturing. However, the stock has been in a slump more recently, dropping 28% in July. Intel is boosting its capital expenditures, targeting a meaningful increase next year as it aggressively tries to morph into a manufacturer of chips for other companies. Zinsser told CNBC's Christina Partsinevelos that the company's latest manufacturing process, called 14A, is ahead of where older technologies were at the same point in the cycle. Intel said its foundry reported $5.8 billion in sales, up 31% on an annual basis. Just a reminder, the whole reason the government took that stake in Intel was supposed to be so they take the money the government paid them for and build a chip fab. Now, supposedly they're progressing on this chip fab somewhere. I don't hear a lot about it these days, but it was all about spurring this domestic chip industry. It's done marvels for Intel stock, though. Stock, it's now only up 0.5% this morning, but year to date, this stock is up 171% now. Over the last 5 years, okay, it's up 89%. Over the last 1 year, up 326%. This stock has had a heck of a move all since the government took their stake last fall. This morning, though, it's kind of underreacting to these. It looks like it's now only trading at $101. So Intel's given up the earlier 4% gains. I'm not sure what happened in the last few minutes that a couple of bucks just vanished. Meanwhile, Oracle is also making news. Signs a 10-year software contract with the Pentagon worth up to $7 billion. All right, maybe this is just a standard software contract, or maybe this is a backdoor bailout of the AI bubble. You tell me. The Pentagon on Thursday announced a contract with Oracle worth almost $7 billion for over a decade, a big win for the software maker, which has been punished by investors this year. The stock rose about 3% in extended trading. The contract covers the use of Oracle software in on-premises data centers for branches of the military, the U.S. intelligence community, and the Coast Guard, according to a statement. The Central Intelligence Agency was Oracle's first customer. A 5-year base period for the contract includes perpetual and subscription-based software licenses, maintenance, and consulting, according to one description. Kristen Davies, the DoD's chief information officer, said the release that the agency is saving at least $441 million for taxpayers by fundamentally improving how we procure on-premises Oracle capabilities. I don't know. When government people say they're saving us money, I always get skeptical. Earlier this week, Defense Secretary Pete Hegseth estimated that the Iran war, which began in February, had cost $37.5 billion. Oracle co-founder Larry Ellison has long been a supporter of President Trump, reportedly contributing $45 million to a nonprofit backing Trump's 2024 presidential campaign. All right, so pretty good investment there. $45 billion super PAC donation gets you a $7 billion contract. Ellison was among the first guests to appear in the White House during Trump's second term, announcing plans for Stargate artificial intelligence data centers in the U.S., supported by Oracle, taking a stake in TikTok's U.S. business. And in May, the Defense Department announced agreements with Oracle and other tech companies around AI deployments in classified networks. So the government is going to send $7 billion to Oracle. And look, Oracle stock, it's up 2.2% here, $122.58. This is a $345 billion company, so it's basically up $7 billion on announcement of a $7 billion deal. But take a look at this. What is the ugliest chart you have ever seen in your life, and why is it Oracle? That is an ugly head and shoulders pattern they put in on that stock, and here comes the government to the rescue. So you guys tell me in the comments, is this just business as usual? I mean, Oracle has gotten government contracts before. As they mentioned, the CIA was their original customer. But it's hard to ignore the political connectivity here. Guy gave a whole bunch of money to President Trump. He's done all these stupid Stargate photo ops with President Trump. And then presto, $7 billion contract. All right, now on to tariffs. 2025 called and it wants its headline back. Trump rebuilds tariffs with new levies on 60 economies. The U.S. will collect duties of between 10 and 12.5% on imports from most major trading partners, its biggest move yet to reconstruct President Donald Trump's tariff wall that was struck down by the Supreme Court. And the political animals would say, nuh-uh, this is about fighting forced labor. Okay. All right. All of a sudden we care about forced labor. I get it. The new levies follow an investigation into the alleged failure of around 60 economies to prevent forced labor in their supply chains to the detriment of American workers. Goods from some 10 trading partners deemed to have adopted forced labor restrictions will be subject to 10% tariffs, including Mexico, the UK, Canada, and India. Duties on items from the European Union and Taiwan won't exceed 10% on products from Japan, Switzerland, and South Korea, will be broadly capped at 12.5% in a way that complies with the trade agreements they reached with the U.S., according to a Federal Register notice published on Thursday. So these 10 and 12.5% duties, they're if we negotiated a deal before and then that deal got struck down by the Supreme Court, all of a sudden we care about forced labor, and now we're going to go right back to the terms of those deals. Products from dozens of others will face a 12.5% charge, with certain other duties stacking on top. The formula also allows for some exemptions, such as for products that can't be produced in the U.S. or where tariffs would cause economy-wide disruptions. How much you want to bet memory chips and GPUs will be exempt from these tariffs? How much you want to bet? Call me crazy. I suspect the AI bubble will not have to pay for these tariffs. Again, guys, we all saw this coming. The Supreme Court struck down the IEEPA tariffs, so they just put these temporary ones in place while they came up with the legal basis for a new one. All right, now we've got this one in the Wall Street Journal this morning. Volkswagen cuts sales and delivery forecasts as challenges mount. More bad news for the European automakers. Deliveries expected to fall between 3 and 7% on the year from a previous flat forecast. Volkswagen cut its sales and car delivery forecast for the year and reiterated that it must do more to counter mounting industry headwinds. The German automaker on Friday said it now expects full-year sales to land somewhere between flat and a 3% decline, having previously guided flat to 3% growth. It said the revision was mainly due to steep volume declines in China after the total market in the country slumped 20% in the first half of the year. Yikes, 20% decline in China. Deliveries are now expected to fall between 3% and 7% year on year as the company adjusts expectations for the weakening Chinese market. It still expects an operating margin between 4 and 5.5% this year, up from the 2.8% it logged in 2025. And that increase in margin is due to the some 50,000 layoffs that the company has already announced, and they're pushing for another 50,000. After working on a broad cost-cutting plan through 2025 and 2026, Volkswagen has pledged to double down as global challenges intensify with new U.S. tariffs, an end to U.S. electric vehicle subsidies, rising manufacturing costs, and mounting competition from Chinese rivals. The group, which houses a stable of brands that includes Volkswagen, Audi, and Porsche, reported a 2% rise in second quarter revenue to 82.44 billion euros, with operating profit down 9.5% to 3.47 billion euros and an operating margin of 4.2%. A FactSet analyst poll had expected operating profit of 4.02 billion euros, so that was a beat on profit here. I'm sorry. No, that is a big miss on profit for a revenue of 81.16 billion euros. That is a beat on revenue and a miss on profit. Also reported a 1.3 billion euro hit from U.S. tariffs on operating profit for the first half as a whole. So rough morning for Volkswagen. We've seen this from just about all the European car makers here, Volkswagen no exception. Meanwhile, we've got American Express surpasses expectations as card spending increases 9%, but the stock falls. This is a bit of a head scratcher from Amex this morning. I'm not really sure why the stock is falling here. American Express on Friday posted better than expected second quarter profit as its mostly affluent cardholder base continued to spend in the past 3 months. Amex second quarter net income rose to $3.11 billion, up from $2.88 billion a year ago. That amounted to earnings of $4.53 a share, coming in above Wall Street's expectations of $4.40 a share. Revenue grew 10% to $19.64 billion, slightly missing the consensus of $19.69 billion. All right, maybe that revenue shortfall, a very slight revenue shortfall, maybe that's why the stock is down. Overall, card member spending, which Amex refers to as billed business, rose 9% on a foreign exchange adjusted basis. Looking ahead, American Express now expects full-year revenue growth of 10% from the previous 9 to 10% view, and the company maintained its 2026 profit guidance at $17.30 to $17.90 a share. American Express stock down almost 5.25% on that news, $323.45 for American Express. I guess it's that little bit of a revenue miss that has people selling the stock. All right. Meanwhile, Michael Gayette is probably getting very excited about this one. Japan's 40-year yield surges as traders question BOJ on inflation. The Japanese bond market is throwing a fit. Japan's 40-year government bond yield led gains across maturities, underscoring concerns that the nation's central bank isn't tightening policy fast enough to quell inflation. The rate climbed 10 basis points to 4.01%, bringing it closer to its record high of 4.355 reached in May. We'll look at that chart in a minute. It was the decline in oil prices which took us down from that record high in May. The 5-year yield earlier hit its highest since its debut in 2000. The increases track moves in U.S. Treasuries as higher oil prices boosted bets that the Federal Reserve will raise interest rates. Bank of Japan officials are open to raising interest rates at a faster pace than the consensus among economists, as the yen's continued weakness adds to upside inflation risks. That's according to people familiar with the matter. Yet half of economists surveyed by Bloomberg still expect the central bank to wait until December to lift rates, with Prime Minister Sonai Takaichi's government seen as a key obstacle to further action. The market is focusing on the BOJ's slow response to rising oil prices, prompting investors to demand a higher premium to hold longer bonds amid concerns that Japan faces relatively elevated inflation risks, said Ataru Okamura, chief rate strategist at SMBC Nikko Securities. Yields will likely continue to rise as concerns over fiscal expansion intensify ahead of the government's finalization of its sales tax cut proposal in early August. So basically what the government is doing through fiscal policy and all of these Keynesian stimulus initiatives from Sonai Takaichi is completely overwhelming the little bit of tightening that the Bank of Japan is doing and the slow pace of rate hikes at the BOJ. And combine that with what's happening in oil markets and the Japanese yen losing its value, people are really worried about inflation. And when people are worried about inflation, they don't want to lock up their money for 40 years for a paltry interest rate. And so they're demanding higher rates in order to lock up their money. And that is causing Japanese bonds to sell off, which is causing the yields to rise. And look at this chart going all the way back to 2020 here. Here's 2020, and the Japanese long bond has just been rising steadily this whole time. I mean, the U.S. 10-year chart we showed yesterday, it peaked in October of 2023, and it's been kind of consolidating in a pennant pattern ever since. This entire time, the Japanese long bond has been grinding higher. Now, if you zoom in a little bit here on these last couple of months, we saw a peak. The highest ever was back in May. That big decline that followed, that was after the U.S. and Iran started talking, and then eventually the memorandum of understanding was signed. And then, of course, at the beginning of July, when hostilities resumed, the Japanese long bond started moving higher again. So, you'll have these ups and downs based on geopolitical events and, this and that and going on and tariffs here and there. But overall, this trend of higher, I mean, the Japanese government needs to get its fiscal house in order. This trend is not going to stop until that happens. And the Japanese bond market, it's huge. It's a big economy, but understand more than half of Japanese long bonds are currently owned by the Bank of Japan. So it's not even really a real market. It's entirely dominated by a guy who owns a money printer, and anytime he wants to buy more of it, he'll just print money and buy a whole bunch of it. And so, this trend higher, this is everybody else saying, BOJ, you want to play your stupid games, go ahead, I'm out. And so Japan's long bond market is having trouble. All right, last one of the day. Another one bites the dust. East Texas data center project pulled after facing community backlash. Diode Ventures said Governor Greg Abbott's tougher stance on data center development in rural areas drove the decision to cancel the project. Guys, this is happening in every corner of the country right now. These projects are getting canceled or at the very least challenged. And this is happening in blue states because of environmental concerns. This is happening in red states, largely driven by water concerns, and farmers don't want their water supplies taken up. A controversial data center project in East Texas is no longer moving forward after the company said it wouldn't be able to comply with Governor Greg Abbott's development standards. Kansas-based Diode Ventures had proposed building a data center in Henderson County near the Cedar Creek Reservoir, a historic waterway in the community heavily involved in water conservation. The Fort Worth Star-Telegram reported the site was expected to take 12 years to build out and consume 5 million gallons of lake water per day by its fifth year. The project's location was concerning because it would have sat right in the middle of a developed subdivision with hundreds of homes around it. Henderson County Commissioner Wendy Spivey told the Texas Tribune. Residents were concerned that it would draw water from Cedar Creek Lake, which supplies the water to the Fort Worth area. With little to no rainfall in the region this year, lake levels have been low for residents, and they worried what years like this would look like with increased water withdrawals. And so another data center is dead, this time because of water. Again, guys, this AI bubble, this market bubble, it is dependent on this pace of construction continuing or even accelerating. And between the rising costs of memory, the power restrictions, the water restrictions, the bond market throwing a fit. We were talking about how the data center builders had exhausted the Norwegian junk bond market in pretty much like in 10 days. They drained it entirely. They've spent all the money in the world and then some. Now they want all the power and all the water, and these projects are having trouble getting across the finish line here. And if this pace of growth even slows a little bit, this bubble will burst. Doesn't even have to stop. It just has to slow. So we got that to go look forward to. Hey, today is Friday, guys, and that means 2 p.m. Eastern Time is our weekly get-together for Q&A on Zoom with my Patreon, YouTube member, and Buy Me a Coffee supporters. Links are down below, should you feel so inclined. Just want to say thank you, everybody, for having your coffee with us Melonheads this morning. Don't forget the like button and that subscribe button. I'll see you guys again on Monday. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.